Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 23rd of April, 2020, and we're now pushing about 5:20 p.m. Central Time. I'm sorry about yesterday, these videos not getting out. I had shot them. We went to upload them, and we couldn't get them uploaded. It's that simple. Our speed from our Infinity here, we had broken during the day many times, outages in our area, and when it came back, my modem wouldn't connect with it right, and we couldn't get them to upload. They wanted 3 hours for each one. If they'd upload, you generally get a timeout. Sorry about that. They got a lot fixed today, but they're bringing me, even in this COVID-19 situation and shut-ins in Chicago, brand new modem tomorrow. I hope it works. Chicago today, the announcement from the governor, we are shut in beyond the April 30th. We're going to May 30th. So if you're looking for your brokers to be back in their offices, for the trading floor at the CBOE or the CBOT, the Merc to be open, not going to happen. That part is still going to stay remote, which means the people you're dealing with, it's another 30 days of this, which is not bad. I think we've all gotten used to it. The good news is they're going to let people outside into the parks. They cannot get together. You have to wear a mask, go into a store. So that's going to be the way that part is done. And there'll be other restraints that are put on, but the idea there is to control a really bad situation. So I wanted you to be aware of that. As we look at the marketplace, the stock market's tried this up, and it seems, in my opinion, to be stalling. I was today on Bloomberg doing the show, and I had gotten up early. I wanted to see what all the other people were saying, what the questions were. And I you know, they don't tell you what they're going to ask you. You have to be on your feet. And I could just see it. They were going to ask me what I thought of the stock market. And, you know, what can I say? I'd rather answer that than what will happen in oil. And simply put, I just see a market that has given you a 50% bounce in the Dow and the S&P. The strongest is certainly the Nasdaq. That's your tech-driven, and it got into the 70 percentile. The weakest is the Russell. And it still can set up 3 of the 4 for new lows. I have my doubts about the Nasdaq. But the other 3 can certainly make a run, and the Russell can make a bigger run. Now, if there's a rotation, maybe the Russell doesn't go there. But I haven't seen that rotation really hitting. You see it a little bit tonight, and that's why I mentioned it, but not big. You can see the Russell's stable, and the others are starting to break down a little bit. And they, by the way, they gave up a lot of gain today. So let's take a look at what happened. For the week, we are down 94 points in the S&P. And the market has had, as I said, this nice move. They got a bounce. It's not out of the woods. Now, if it were to close like this, and then you start back up and get through these highs on a closing basis, I think a lot of traders would take note of that. So far, getting 2 waves to the upside, no. And where did they end up? Well, let's go and take a look. This is 38%, 50%, 62%, taking it from the high to the low. Now, I could have clicked this and made the numbers there. I like it when sometimes you don't see the numbers. You can see where you're stalled. And to say that from here the market's going to go up for new highs, and I heard talks like that today. In fact, I was hearing people come out before I was on. They're going back to these highs of the 3,400 level. I'm not arguing. I'm not agreeing either. I think the market's in a pause area right now. We obviously fell apart, and the market, with all the bad, hasn't been able to get back down here. It is not COVID-19 that's going to take the market back down here if it goes there. It has to be financial. So if it's financial, it's got to be corporations taking it so bad that some close. It's got to be that the economy does worse than we think it's going to be. It cannot be a V recovery if you're going back down here. It would have to be more of an L or a U-shaped one. So that's just the idea as to where you're at. Now, when we take a look at what the market's doing recently on a day-to-day basis, you've got a higher high and a lower low. You're spinning. This weekend, what do we have? We have Georgia opening. We've got Colorado getting ready. I believe it's next week, Texas, and so on. People are going to be looking on TV and they're hoping things go well. I'm right with them. What's the element that could set all this down? They go out, and within a week or two, we hear that there's more cases. Now, the reality is it's supposed to take 14-day incubation, but it can happen quicker. So if people are going out in those areas where to get more cases, it would be a bad event, not just for those areas. It would be a bad event worldwide. It means as people get back together, there's a real problem. My job here is to just point out things. We're drifting. I'm not a doctor by any sense. When I look at where the market's at, you have upside bias. You've been able to stay over the 18-week average of closes. The 200-week is right here, and the 100 is in the green. When I take a further look at the market to see where the Bollinger Bands are, you have a resistance point in front of these two averages at 29.54, let's round it, and the 24.61.5 zone right here. They're not in play right now. What do I mean by that? You'd have to have a pretty big rally from 27.75 to get up to 29.53.75. I'm not saying it can't happen, but it's a big rally, and to get from here all the way down there, that'd be a big break. In momentum, this momentum's fighting this market. Several other things are fighting the market. My rule of thumb, really simple. When you have an embedded reading, it means that the numbers that make up the slow stochastic are going sideways over 80. That means you've locked in a trend. The first thing that happens if those numbers are lost, and I'll show you where it gets lost. It gets lost Tuesday, this past Tuesday. If you don't get the number back up over 80 immediately in the market has changed on you, and that's what happened. And what I think the market has done is momentum leads price. That's my theory. I think this market's setting up for a retest of the 18-day average of closes. If you go back and you study how this works over and over, be it from a top side to a downside, you'll get the picture. You know, it shows itself so often that you go, okay, it may not do it every single time, but most of the time it does, and you'd have to re-embed to get it going, and you can't. Now you're just playing in an overbought market. This is what you did today, and this is where you're at right now. So you're spinning that wheel, and as you're doing it, admittedly, the 18-day average is climbing a little, and we'll see if prices can make its run. That's one of the things I'm looking for. When I come to the Nasdaq, the market had the best run of everything, and it did the exact same thing. That is not good. Now, for the Nasdaq, unlike the S&P, the only moving average to get back to in the S&P is the 18-day. You have different tiers in the Nasdaq. The two tiers that are the most likely are right here because you're trading already at the 100. So I'll be looking at the 200-day average and the 18. But anyway I go, you're not trending. You have a pattern of a lower low and a higher high. And even tonight, you're breaking through that low. So let's assume I'm wrong. How would I be wrong? That's the way I look at it. We've already taken out the lows of today. 85.80 was the low of Thursday. We're in Friday session. You took it out. So to get the market and capture the people, we already have the bias up since price is over the 18-day average. You'd have to take out 87.86, and if the market could pop there, 91.37. Admittedly, you would not have it with an embedded reading. It'd be in an overbought condition, and I think a lot of algorithms and traders look to see if a market's overbought or oversold, and they filter our trades with it. So I think it's a hard thing, but I recognize it could happen. When I look at the Dow, again, it's like the S&P. I've got the higher high, lower low. I see no setup here except one thing. You lost your embedded reading. I think the market has a great chance of going back to the 18-day average to regroup. If it closes under it, by the way, it could be bearish in both the S&P and the Dow. In the Russell's been a little different here. It has been keeping a pattern of higher lows but lower highs and over the 18-day average. Any close now, be careful. If this market were to close under 1160.460, 1169 is the first number, but under that could be a breakout to the downside back to this number. What about to the upside? Well, The market, the last high we had, we can see it right here, was 1233.50. You came up, and today the market hits 1233.10 and it's backing off a bit. So the number to get the market to say it wants to go higher, and that's the number I think the bears are going to defend, they don't want it to happen, is getting over that number, because that keeps you at the higher lows and then the higher high, so you can kick up to there. It'd be a counter the momentum of the market, but could happen. The next chart, come on, baby, give it to me. This should be the VIXY. Somebody asked me, by the way, the other VIX I had. If you put in S.VIX, that was the name of that one. This is the VIXY. And on the VIXY, you've been in an uptrend. Here's the thing that happened. This market, if I can get it to work right for me, we'll see if it will. There we are. Okay. You had the embedded reading. And I'll come back one more day. You had you were under 20 several days, a lot of days in a row. You lose that. Are you ready? Watch what happens. When you lose it, unless you get it back right away, what am I going to say? I'm going to say, and I teach it in my charting course, the odds are very strong. Price is going to try to make a run for the closest main moving average, which on this chart is the 18-day average of closes. Market comes down. This is the sucker move, in my opinion. You're still not back to, you got 1 day of embedding there, and now you lose it, and bang. So it's made its move. Now the question is, what next? But here's the dilemma. You're in an uptrend in this market. You have higher lows, higher highs. The momentum is certainly pointing up, not down, and the bias is up. So unless you take out, back here at this 3188 level, the bulls took control of the market. In the bond market, you've been in an uptrend, you hit the upside targets, and you hit them right here yesterday, but you really hit them the first time on Tuesday. That's where I think the pros took money off the table. You went up and hit it again for good measure yesterday, and today you're falling back, trying to find support against that 18-day average of closes. The trend is up. You're in one of these tight funnels. From tight funnels, all kinds of big moves happen. They can churn you first, but eventually this is the pattern that sets big moves up. At least that's my thinking. And when I look at the slow stochastic, well, I've got it in overbought territory. So uptrend, hit its target, bias up, overbought. 10-year note, not the same. Hit the upper Bollinger Band, that stopped the play. Made the higher high, then a lower low, and you're drifting. And overbought. Again, there's that tunnel. In that tunnel, you can get all kinds of false moves. The one thing I try to avoid in trading is staying away from those. I'd rather come in after they break out one way or the other, because that's where the whipsaws happen. Everybody's trying to get positioned as it's going to break out this way, it's going to break out that way. The only thing they do is break my neck. In the dollar index, you're in an overbought condition. Okay, so what do I think? Well, if you get up to the upper Bollinger Band, I expect the pros to take money off the table. I don't think they're going to bet that you're breaking out from it. I think that's where they'll try to come out, and they certainly don't want to see yesterday's low in the market taken out of 99.99, because that could break the pattern. That would give you a higher high and a lower low. So it's got to do something right now for them, otherwise you're wasting momentum. The flip-flop's true in the eurocurrency. You're oversold, knocking on the door. You know what I'm going to say. That lower Bollinger Band is where I think the pros want to take money off the table. It got pretty close. It got within 6 points. That's pretty darn close. So you're in that zone. It's been bearish, but oversold. I think you got to be cautious about pressing it beyond that Bollinger Band. And no, it's not a sign to get bullish. It's a sign where I think pros are going to take money off the table. Like the bonds and the notes, you've now gone sideways into the Japanese yen. So it's important to recognize when events end and the market's starting to build power for whatever the next event is going to be. And this market's just churning itself at that 18-day average of closes. The swing line down, the bias up because you're over the 18-day average, and momentum pretty flat. Bitcoin has reasserted its uptrend. It did it not yesterday, Wednesday. It did it today when it got over this number. And it went right to the resistance point. Notice that first challenge of the Bollinger Band, I think pros took money off the table. That doesn't mean that this can't be a base and it goes higher. Then you figure out something else. But that first hit is so often where a market stops, and from there things start unfolding. You have momentum up, bias up, trend up, and base building in this market. In the Brent versus WTI, first we're going to have to get out of these Junes. They're going to go off the board right away. This whole situation's going to happen again very soon in June crude. So what some of the clearing firms are doing is they are saying they don't want their clients to be trading the front months. They want them to go to the second months or further back. I saw that notice come out today, and that's because nobody's ever seen what happened. Does it seem just days ago that we were a negative $37 a barrel? Nobody's seen that, and there's no way to control risk on it, folks. I know you think you can. I've been at this 51 years. You can't. And the options are even worse. So I think that's what's happening with this, and I don't know what they do, but to allow that big of a break in one day without limits, I don't know if that would have been a good thing or a bad thing. There's many things that are going to be discussed because nobody's seen that. But obviously you've thrown the spreads out of kilter, because now you're looking at Brent and you got to say to yourself, okay, I can still store Brent in different parts where I'm producing it, and it's primarily, Russia plus, that's the plus on the OPEC, and the other countries, they have storage. But at home in America, you're out of storage. What storage there is accounted for. It's a pro's game. That's what you got to be careful of here. And in the June Brent, as much as you've gotten a bounce off this $6 level, it's hard to believe. You don't look that bullish to me. It's a bounce. It is oversold. It is a market down here, and while I'm covering it, I'm telling you, I'd be scared for my clientele to trade it. When you take a look, and by the way, that's the Brent. I said this wrong. This was the Brent. Here is the WTI. 650 up to 18, tripled in price in 48 hours. And what do you do with that? Now the market, if it stays like this, reasserts its bearishness. Now, what were we talking about sideways action? You tell me what that is. That's that tube that I tell you about. From these tubes, events happen. You've got to learn to recognize them. I teach this in my charting course, and boom, there was your breakout. Market climbing back into the Bollinger Band is all that it's done. I'm not a fan. What about gasoline? There's the tube going sideways, and here's the typical part. You get up to a Bollinger Band, you can't get through it. You get down, you can't get through it. What did I say? That's that whip that goes. From here, trends come. So if I had a checklist of things, these are on my checklist that I want to keep watching. In the nat gas, we got overbought. We've hit the upper Bollinger Band on the 100-day average. The smart money probably took themselves out here. They're waiting to see the next event. We all know there's going to be less nat gas. We all know that come tomorrow, we expect strong. We're going to see more reductions in oil rigs, which means gas byproduct gone in many of those areas. You're getting into the balance. That's the important thing. If you like what I'm saying here, you're going to love what I do if you're an ETF or a spider trader. Because in the afternoon, about 4 o'clock now, assuming that I don't get one of those nightmares like yesterday, I try helping you from your own second guessing of what you're looking at on charts. And the reason I do it in the afternoon for this one is because you're not going to open those spiders and ETFs for much trading until what time? 8:30 in the morning. So if I put it out then, you tie this together with what the futures are doing in the morning and you start getting an idea of what's going on. I cover 27 charts in this, and I'll show you all the ones that I do. I cover the points of entry that I think you should use, the exits, the stops, the profit objectives. Maybe that type of talking will help you. The charts look like this. They look very different than what you're seeing here. I cover all the major spiders. I cover the 4 major stock indices, the SPY, QQQ, DIA, IWM, the interest rate, TLT. Then I'm going to give you the metals, so I'm going to give you the gold miners, I'm going to give you the gold and the silver. I'll cover the 3 big currencies that trade in it, which is the euro, the yen, and the pound. And of course, I'm going to cover the energies for you. So I'm covering consumer staples, all these areas, giving you what I'm seeing. So if you're a trader that's looking for maybe an edge, maybe the edge being you think you've got something, what is Ira saying about it? I think I've got it for you there. So how do you get to it? It's really simple. It's in our website. All you need to do is go there, and it's www.iraepstein.com. Under the word research, there is a charge for it. I mean, these are where I really put the meat of what I'm doing. And I think it'll help you if you're looking for ideas. Now, I don't want to trade your money. You're going to trade your money. You decide if this fits in with what your thoughts are. You might have a thought and you go, wow, he sees what I'm seeing. Or, no, he's seeing something completely different. Why didn't I see that? Or, he's so wrong, I'm going into the trade. Who knows? You can click up here, by the way, also. It'll take you right to that area. Need a haircut one of these days. With the social distancing, I'm going to be Robinson Crusoe. You have a good day. I will talk to you all tomorrow. Take care.